While we were waiting for people to come on in,
Must, Dylan,
um,
must
does
you hope.
anybody have any particular thing they want to see charted?
See, here I am. Charted.
Bob, can you kill your audio?
Yeah, it's just weird. I can't hear you when I kill it.
Oh, I don't know. The way you had it before was I never got the feedback.
It's so weird. I know what I have to do. I got it. I never got the feedback. Yeah, I gotta turn this off. Never mind. So weird. I never got the feedback. Yeah. Just give me a second.
Okay. Mafale
That
wants to
better?
look at B trash. All right, we can look at B trash. Let's see which. Let's see. Okay, let's go to this one. So B trash, B trash. It'll be interesting to see Mafale if they try anything again this weekend. But I mean, that if there was ever a pump and dump chart, that's it, right? I mean, that was just ridiculous. So ridiculous it kind of screws up any kind of technical analysis. So what I would do is go to a smaller time frame, and the crypto money machine hasn't really signaled anything since the exit after the dump. It actually signaled long before the pump, and then right after the dump, it signaled to get out. Hasn't signaled anything since. As far as, I mean, obviously a ton of volume in this 22 to 12 area. So if it breaks below that 12, it's probably going to go back to circling the drain as it was before. But what you can do is you can kind of look at this last range. So basically it was consolidating and then it fell out of this range. So then what for me, I would take the range here and I would look, and basically you got a fib short zone there, which you can see is battling. So if it got back above this prior high at 18,439, then I would say they might have a little bit of momentum, but I'm not, what's the catalyst there for that thing to go higher? I'm not sure. I mean, to me, it's just severely overpriced. I mean, there's just no transactions on the network other than what's trading. So, um, you know, technically it is getting a little more bullish on the technicals, but what this tells me is that if this starts to roll over, then we're going back to prior lows point 8, which is where it was hanging out for a long time at. So we'll see. But those guys made a really bad name for themselves, which is what we're going to get into today. We'll get into the conspiracy. There was actually a manifesto, and they got through part of their game plan, and we'll kind of discuss that.
Yeah, we probably get started already. We're about 20 people now, Phil.
Okay. All right, guys. Well, thanks for joining us today. So, today we wanted to kind of go over what happened last week with BCASH, and then we'll cover some ETF stuff as well. But essentially, what you have to kind of back up to before what happened last weekend, and so this comes down to an issue of scalability, and everybody. There's two trains of thoughts, right? One is that Bitcoin's going to be able to do everything, be a store of value, be the day-to-day transaction mechanism for your coffee transactions, your micro transactions, even your nano transactions. So one camp believes that, and they believe the way to achieve that is with big blocks. Okay. The other camp is no, Bitcoin was designed for 10-minute blocks. So by its very nature, it's not really designed for day-to-day transactions, at least not the type that require a quick transaction time, like if you're checking out at a cash register or something like that. So the other option there is to create a payment channel or payment channels. So that's where like SegWit was thought up, where you could take some of the information that's on the block or in the block itself and take it off that and store it like kind of like on a side chain kind of a thing. And then there's also second layer options which enable you to do things like Lightning Network and things like that. So those are types of payment channels. And it's kind of a philosophical thing. Personally, I kind of go back to what was Satoshi Nakamoto's vision, and you can go back to his early postings in the Bitcoin Talk forums. And his philosophy was that Bitcoin was going to be a payment or a reserve layer, kind of like the reserve bank of crypto, and that you would facilitate quicker transactions with payment channels. So, you know, I kind of think that's the approach to all this, because if that was his thinking in the way he designed it, then you kind of just go with that. So that's where this kind of all started. So then there was the idea of SegWit, and then there was the New York Agreement, and so some of the CEOs and the a lot of the corporate guys that are behind businesses in the Bitcoin realm, whether it was mining or the exchanges or vendors or payment processors, things like that. There was a whole slew of them that said, okay, we're going to do SegWit 2x. The problem with SegWit 2x was the coding team wasn't that good. The guys who are in charge of the current protocol, I mean, they're an all-star team of coders, right? So there was a bit of a battle between them and the SegWit 2x agreement. So basically what happened was you just had a bunch of consensus on, Twitter, the internet, whatever. And the large majority of the Bitcoin user base didn't want SegWit 2x. They wanted to go with SegWit, which is the Bitcoin Core version. Excuse me. So what they did was they decided to do a user-activated soft fork. So they enabled SegWit before the 2x date. So they were about, I want to say 2 months before when SegWit 2x was supposed to activate. Maybe it was longer than that. Yeah, because October. So they were like 2 or 3 months before that. So they activated it. So at that point, it was kind of like, okay, well, why have SegWit 2x? We have SegWit. But SegWit 2x, the reason I call it 2x is because the block was going to be bigger. So SegWit actually grew the block from 1 megabyte to 2 megabyte, but SegWit 2x wanted SegWit with even a bigger block. So that's where you get the term big blockers from, because you have people that want bigger blocks. So they were going forward with the SegWit 2x. People were consolidating into Bitcoin. Bitcoin was driving up in price, which everybody kind of saw coming. So everybody was getting out of the alt market, getting into Bitcoin, because this was a big fork. And you wanted to get your allocation to 2x in case you didn't know which one was going to be the one everyone used, right? But at the last leading up to it, about a week before, they threw in the towel. They said, you know what, consensus, we don't have consensus, that we don't have the numbers, SegWit 2x isn't going to work, we're not going to do it. Then what happened was, and we talked about this in our SegWit 2x It's a Trap video about 2 weeks before this happened, we said, don't be surprised if these guys pull some shenanigans and they use this as a tool or a way to destabilize the ecosystem, if you will, and start pumping BCASH. Because BCASH was done when the SegWit, the user activated soft fork of the SegWit back in August. Okay, some people call that SegWit 1x or whatever. But that's currently what we're running. So we're running Bitcoin with SegWit right now. When that activated, Jihan Wu of Bitmain, who controls a lot of the mining hardware and a lot of the mining hash power, he decided, okay, well, I'm going to just break off and fork off this BCASH. And so at that time, everybody just basically thought, well, he's just, that's just his retaliation for not winning that SegWit 2X battle. And so go ahead, fork it off, have fun with that. And for a time, it took a little bit of the market cap from Bitcoin, but slowly over time, and after its initial release, it just started dribbling down, and looked like it was circling the drain. So fast forward to the SegWit 2X being called off, that very weekend, we had this huge pump and dump campaign. We had this huge campaign about how BCASH should be the real Bitcoin. That's the real vision. That's the way it should be. That's the way it's going to scale. And you had this coordinated pump and dump effort, and you saw Bitcoin, and I think they did it because there's a couple of reasons why. One was their difficulty algorithm, which is basically a way of saying how the network throttles itself. The network looks at how much hash power is being used to produce Bitcoin. And so it creates this difficulty algorithm based on that. In other words, it makes it how fast can you mine Bitcoin. So if a lot of hash power gets on the network, and you'll start solving blocks faster than the original intended 10-minute time period, and so it becomes very profitable. Except for when the difficulty resets after a period of time. It's set in so many blocks, so it's usually like a 2 or 3 week span, maybe longer. And basically what happens is the difficulty will adjust, and then all of a sudden it's not so profitable. So you kind of get this sloshing effect of profitability and not profitability. So these guys that were mining Bitcoin Cash, their difficulty was going to adjust. But it was going to adjust downward. So they were looking at being 2 times more profitable mining Bitcoin Cash than Bitcoin. So what they did was they drove up the price of Bitcoin Cash. Now, while they were doing that, they were also spreading a lot of misinformation around the internet and stuff like that, that everyone's leaving Bitcoin, they're going to Bitcoin Cash. And there was total price manipulation, because if you watch the price action, you would see the way the price was moving up, they were throwing bids in higher than what you could actually buy the current price at. So say if it was 0.3 Bitcoin, they were going at like 0.32, 0.33 Bitcoin. They were just leapfrogging over. So it was obvious manipulation to try and pump up the price. So that being said, they got it up pretty high. Then difficulty was going to change back to where Bitcoin was 2 times more profitable. And what I was telling folks at the time was they're going to switch the hash power because the miners are going to go where the money is. Don't follow this pump up. So, and that's what happened. But they switched, and then Bitcoin Cash started to come down. But it was all part of this coordinated campaign to try and see if they could flip the economy to Bitcoin Cash. That's a pretty bold move, but you're talking about, you have 8 years plus of Bitcoin, the current Bitcoin code that we run. It's everywhere. There's 10,000 plus nodes that run it. You have all the vendors and everything like that. So it was a pipe dream in my mind that they would even think that would be possible. You have exchanges. The exchanges would all have to get together and coordinate in one fell swoop, switching that over. Who's going to go first? The exchanges aren't by any kind of union or anything like that. They're all on their own. They're all solo. So they're going to follow what the economy was. And that's why I kept telling people, you have to follow the economy. This is all just a bunch of noise, and at the end of the day, you're going to follow the economy. But as things kind of played out afterwards, we saw some things that popped up on the internet. And there was kind of like what it seemed like is there was a group, probably Bitmain included. I don't know for sure, but of the bigger miners, and they were saying, we have Bitcoin Core, we have Bitcoin Cash, we have SegWit 2X. We don't want to mine all these different forks. We just want to mine one coin, and we think Bitcoin Cash should be the one. So that was kind of so along those lines, it was a plan to consolidate into one coin. So you're not having to worry about all these different forks. It's easier just to mine one coin, focus on that, and make your money. So they wanted to basically make it where they could flip everything one time. Okay, so that's this whole thing. So they wanted to go ahead and before the difficulty switch, they were going to basically they said they just were going to drive up the price and be able to try to make it so that everybody would switch over, and basically just try to flip it, and it just didn't work. So it was pretty wild to see, like, you know, the stuff come out afterwards about how they were trying to do that. And it was I think what it was kind of a Hail Mary. I think they saw that, like, the CME futures were coming out, and that this was their one last shot at getting their vision of what Bitcoin should be out there, and have everybody adopt that. At the end of the day, Bitcoin, nobody owns the name. It's what everybody says it is, right? It's what everybody's using. And so that being the case, they could, if everybody switched to Bitcoin Cash, you know, then you could say, well, we're calling that Bitcoin now. So that's basically what the philosophy was on that. And but it just failed. And that's the thing you have to understand. You can't, when you're dealing with a decentralized network and a consensus-based network, and you're trying to have a small group that's centralized try to overthrow it, I mean, that's just really, it's a very tall order. And that
was the thing that fascinated me, Phil, is this is, you put a conspiracy theory on this a little bit too. I mean, if these guys could have taken control, these 5 CEOs or exchanges / mega miners, is that would have killed the whole crypto phenomenon, because, they could call themselves decentralized, but when you're sucking up half the the electrical power coming out of a dam to mine coins, how hard is it for the government to show up at your door and shut you off, versus thousands upon thousands of laptops or mini servers around the world that will just keep on trucking. To me, I think there was like a twofer in here, that I'm sure the cartel behind these guys were egging them on, because this would be just a way in which they can just get control of it, just like they try to do with the bullion banks trying to control, the gold supply. And I think people, thank goodness we've had such a wide adoption of miners and nodes around the world, because I think they would have killed it.
Yeah, I mean, they had a pretty detailed plan. They were going to get their mining equipment ready to switch at a push of a button. Then they were going to switch to Bitcoin Cash mining before the SegWit 2x fork. Okay, so that's why they called it off, and put all their mining power into the legacy Bitcoin until the difficulty adjustment kicked in, which was around November 10th or 11th, and that because they wanted to maximize the effect of what they were doing. And then also they wanted to do it in a way where, like, all the hash power would leave it and just basically lock up the Bitcoin network. And then and so then afterwards they were going to send all the Bitcoin that they had as this group, so they've got a lot of Bitcoin. I mean, they do turn some over to pay for things, but they're also holding it, right, because it appreciates so much. They're going to take it all to the exchanges and then start the dump. And that's what basically they did. The problem, though, and so it's like really shady, right? I mean, like, you're trying to upend a consensus decentralized network. So they dump all this coin. They pump it. The problem, one of the big problems was they were using it out of the South Korean exchange, and that South Korean exchange locked up. And it locked up and price collapsed. And I think at the end of the day, it cost them and anybody else who was chasing that up a lot of money, because they couldn't get out. In fact, that exchange is actually facing some legal action from some other South Korean users who were doing that and lost money because they couldn't exit out when price dumped. So they bought up there at 0.3 Bitcoin, and now it's like, they lost half the value at the current state of things. The other thing too, you guys have to think about is the SegWit 2x team. If that was to go through, guys, that would have locked up Bitcoin. They actually, because some guys actually, there was a small contingency that went forward with the SegWit 2x, and the code locked up yesterday, because yesterday was when it went active. And it was because of some really simplistic coding errors. They actually didn't code the correct block, and it ended up locking up like 2 blocks before it was supposed to go active. So that if the SegWit2x guys got their way, they would have ended up killing the network. It would have been a huge, just a complete fiasco. And so it goes back to basically that, you know, you have to go with where the economy, where the development is too. I mean, the development team is like an all-star basketball team versus what the SegWit2x guys were doing, which was kind of like a high school team. You know, it's just not, you don't mess around with a multi-billion-dollar economy on code that's not very well tested. So it just kind of shows you where these guys, you know, where their head's at. You know, so the code was off by a block. Also, the communication that to tell the miners they had to update their config files wasn't sent out. It was just really messy. And so that no 2x movement that you saw on the internet or on Twitter was really important because you know, it prevented pretty much a disaster from happening. And
yeah, so, Obama calls that team the JV team.
yeah, that really was the JV team. You know, the other thing too is like, so you go back to the big block thing too. So you have a group, you know, the whole point of Bitcoin is decentralized, right? So if those guys had their way, they would have had a lot of the, you know, basically that would be them dictating what Bitcoin is, right? And really what it should be is the network dictating what Bitcoin is. So what all the nodes are running, you know what I mean? And here's the thing with big blocks. You can, I'm not going to say everybody has their take, right? It's a free market. And yeah, big blocks does solve some scalability issues in the very near term. So, but if you look at that as a way to solve scaling Bitcoin to do more transactions, then as the network grows, so do the block sizes, right? And if you want to encompass the day-to-day transactions, if you want to encompass the coffee purchases, what do you have to do? You have to grow by orders of magnitude. I mean, you think about what Visa and MasterCard do, right? They're doing hundreds of thousands of transactions every minute, if not millions. So that's going to create blocks that grow by orders of magnitude. So never mind an 8 megabyte block that processes all the transactions at each block interval. You got to grow it to like, it's going to grow to gigabyte blocks, and then terabyte blocks, and then petabyte blocks. So that's the road you're going down. Now, if that's the case, okay, how are you gonna have nodes decentralized like we have now? Because anybody can fire up a Bitcoin node now. It takes it about 2 or 3 days to download the entire blockchain history because it's gigabytes in size. But if you were to go with big block route, the blockchain, the size of the blockchain would be so enormous, nobody could ever house it, you know, on a computer. It's not possible. You need large centralized data centers to house a blockchain that is just incredibly huge. So now you've taken something that was supposed to be decentralized, right? And you've made it an architecture for it that it needs to be centralized, highly centralized. There's no way you could house the blockchain unless you're in a huge data center with huge amounts of disk space. So that's why I don't like big blocks as a solution. And I think Satoshi probably saw that, and that's why his mandate was, let's do payment channels, let's do other options. And I think SegWit and things like Lightning Network and atomic swaps and all that stuff, and stuff that Litecoin's doing in conjunction with that, makes a lot more sense and is highly scalable. So if you want to if you're talking about global scalability, those are your options. Those are the ways that it's going to get done. But big blocks would just lead to centralization, and that goes against the ethos of what Bitcoin is. So that's my take on the big block versus small block debate.
No, that's a great wrap up on that. I think the issue is probably going to come up again and again as it's like a Betamax VHS kind of a thing, and Apple operating system and the Windows, and but somebody has to win, you told me about the that sitting as kind of like the main layer and have these payment channels on top of it. That just makes perfect sense, and it's very elegant too, and so simplicity will win, Phil, I think, and you can see it too. Once the BCASH started rolling over, we got a pop in Litecoin, and so all the other alts started to move. And now maybe we can, because you called that as well. You said, hey, once we get past this garbage, the alts will start to move. You want to roll over to talk about a few of these? I know some people had some they wanted to talk about, and Ethereum was of interest to me, and I was glad to see that you showed the future is going to be for Ethereum as well, as it's breaking out of its cup and handle right now. It's just about at 340, so I think it's ready to make its big move too.
Well, here we go. Here's your, we're starting to see it, right? Here's the chart. The chart's up here, and here's our DTMM showing you a nice long signal as momentum was building, and now you're that signaled at around 332, and here we are at 339, which really is just with Ethereum. That's just kind of getting started really for a move. So you really want to see this high here of about 340, and in what I'm looking at is really seeing this 350 area get broken. But I think the future announcement hit, but I don't think it received as much fanfare or publicity as the Bitcoin CME futures, because that's the King Kong of it all right there. But it does make it so that you can, so institutional investors can also get into the Ethereum space. So I just, the money, you have to follow the money, and the inflows are coming, and that's why I did that video, because I said, if you're hanging on to Ethereum and you've been very patient, and that's sometimes we get, crypto can move so fast. Sometimes you get spoiled and you're thinking, wow, man, this thing hasn't moved in months. Whereas in the larger scheme of things in markets, that's not abnormal. That just sometimes happens. You go through a consolidation period. But yeah, I think right here, if you look at this chart, that's just screaming that it wants to break out. And so if we look at the alt market in general, for many weeks, if not months, we were just seeing all the alts red and Bitcoin green, and part of that was the fork stuff leading up to the fork. But now we see, now we're seeing green alts. So we're seeing I said it's going to be the alt rotation. So we're seeing that. Now, that being said, some of these are going to pop and drop, and we started seeing that in the last couple of weeks, where things will pop up and then they get smacked right back down. And I think those are just the coins that are probably not going to be around that long. I think what you're going to see is the stuff that's going to be sustained. Watch the ones that don't do that, right? They're going to continue on. And guys in the room, we kind of have our coins that we're focusing in on that are doing stuff and have a plan that would make them valid for beyond this year and next. A lot of these coins won't make it past next year. They just won't. And they'll get delisted from the exchanges, and that's usually a death sentence for any alt. But yeah, the rotation has started, and so Ethereum, I think this is where we start looking at a move where we'll probably run up to 350, some resistance there, but then some of these longer term, and I can actually go to a longer chart here. So we had this big head and shoulders, and to me, I thought that marked a major significant bottom. Inverted head and shoulders here's a shoulder here on the left, shoulder here on the right, and this is the head. But it's upside down, so you call it inverted. That's a bottoming pattern. Reverse of that would be a regular head and shoulders, and that's a topping pattern. But I looked at that, and I thought this was probably a major bottom. I wasn't expecting it to consolidate this long, but I'm fully expecting this pennant to get broken out of. Pennants are consolidation patterns, if you guys aren't familiar with candlestick patterns. But you look at all these fib zones that are piling up, and it hasn't really created any bearish fib zones. These are all green fib zones. So this big retracement to this big green area here takes us all the way up to about 520. Okay, so I think that's where, when this breaks out, I think we break out of this, comes back down, retest the top of this trend line, and then boom, we're off to 520. and there's just been a lot of pent-up demand. Part of it too, you guys have to understand, is a whole ICO thing too, right? And what happens is you got guys that are going to come out with an ICO, and back in this area, that was just a hot thing, right? Everybody wanted to get ICOs, and then all of a sudden they didn't start, you couldn't really flip them like you could in the beginning. And so I think the ICO whole phenomenon's cooled off a little bit. Plus we have stiffer comments coming out from agencies like the SEC and stuff like that about how they should be, some of these just can't even release in the US because of the regulations. They're considered securities. So you're either a security, which is like a share in a company, or a utility token, which is what I like. Give me utility tokens, because if you need to use them, that creates a demand for them. So I think with the ICO stuff slowing down, that's going to help the price of ETH somewhat. Otherwise, you just get constant sloshing back and forth. People dumping into an ICO, they have to buy Ethereum to get it, and then the Ethereum development team immediately sells what they need to get money to do their further development, if they're legit, or otherwise it's just a cash grab. And so you get the sloshing effect. So if that slows down, then we see less of a sloshing effect and more of an organic type of growth, without all that, pumping in and then dumping through various ICOs. So,
yeah. Hey Phil, I think somebody asked earlier because of the about Monero, if you wanted to throw that chart up.
Okay, so here's the thing with Monero, and I'm going to do a video probably next week on it. Monero's claim to fame is confidentiality, right? Stealth transactions. You can't really trace the transactions, and so that's really cool. But here's the thing with Bitcoin and Litecoin and stuff, they're working on confidential transactions. So when you're able to consolidate features into one coin, especially the coins have been around a long time and they're pack leaders, if you will, that puts a lot of pressure on an altcoin whose sole purpose is that one functionality. And I don't care if it's confidential transactions or quick transaction times, whatever your feature is of that coin, if that's going to be able to be incorporated in one of the big boys, then that altcoin is going to have a steep uphill battle to maintain not only price but the market demand. But yeah, I'll bring up Monero here.
But you're not bullish on Monero, are you?
I think that no, because of that very reason.
Yeah.
Not that I think Monero you could trade, like if you're just wanting to speculate, but as far as being like part of your core holding, no. One thing I see that jumps out at me is we're kind of in this head and shoulders pattern here with this is your right shoulder, the head, and I'm sorry, left shoulder, head, and right shoulder. So if this line here breaks, this neckline, very bearish for Monero. If that breaks, that's bad news bears. And then so what I'd look at, so we got somewhat of a retrace from the highs, right? So it would be interesting to see if we get up into this bearish fib zone here, and we also have another one that's probably right into the middle of, yeah. So you have basically this area here, and you have also a bit of a volume void here, so it's like I call those air gaps. So price can move quickly when you have this situation between these zones. So it could move up to this 19 area, but with this formation, it's pretty bearish. So if we don't see it breaking above this 0.0176 level, this downside risk remain, and that would be these target levels here of 0.014 and 0.013. So if you're a bull, and currently we have a long signal from back here at 0.15, but I would be a little bit leery. The other thing I'd be leery too, guys, is, and this is technical analysis, we have a bearish divergence. Okay, so that means that this is going up, price is going up here, but you're losing momentum on your indicators here. Okay, so when we see that, that's a red flag. That's bearish. So this could very well roll over. So if it does roll over, then the next thing you want to look at is this level here. This is your basically your bull zone. That should hold and bounce if the bulls are in control and break this bearish fib zone here. Okay, then that would run you up into this zone here. Otherwise, if this breaks, then yeah, I think it's basically the bears have it and it's going down. So that's a technical analysis of it. I think fundamentally though, if, like I said, if it's going to be challenged by Litecoin and Bitcoin for that functionality, it may not go anywhere. It may go down.
Yeah, you know what, Craig, you're right, and Alfred, you're right too. This is all very new technology, and people are feeling their way through it. The hard part for regulators are going to be is that I don't think every country is going to adopt the same standards. I'm already seeing that Switzerland and Japan have very, very different views on how they're going to react to cryptocurrencies than maybe the U.S., because the U.S. has a vested interest in a banking system and a monetary system in which they control. And I think the Swiss see an opportunity, and I think the Japanese have recognized the fact that their economy will collapse and their people are going to need a lifeboat that's non-banking related. And I think, I was telling Phil, I said, I think the lifeboat has been put out. This is a long time in coming, and people ran up the stock market, they've run up the real estate market. We have the Fed last week started to talk about negative interest rates in the United States if we roll into a recession. Now, if you have wealth and it's in cash, you're not going to sit there and let the federal government confiscate it from you, especially if the bond market reacts negatively. That you're going to see people just dumping into the crypto world. And I have a few friends that are what I would call mid 1%ers. They're almost filthy rich, but they're rich. And about 6 months ago, as soon as Jamie Dimon started talking about this thing being a fraud, it was almost like a contrary light bulb went off, and these guys started to roll hard into cryptos. I'm talking 6-7 digit investments in. A lot of them got in around 36, 4,200, and they're like, we're not selling. This is our escape from reality here of the banking system. So I think a lot of these guys are going to make sure that they have a way out, and so it's going to be really interesting to see how they're going to play whack-a-mole on this. The Chinese tried to shut down the mainland exchanges and the ICOs, and that didn't turn out very well for them, and they're going to probably have to rethink how they're going to approach this, because capital will leak out of a country no matter how hard you try to bottle it up. And if you do bottle it up, your economy will hyperinflate or crash. So I just think it's going to be really fun. Nobody really knows for sure how it's all going to play out, but for sure you want to have non-correlated assets that are not part of the banking system going forward, in my view.
Yeah.
So, hey, maybe we should switch gears a little bit here. You guys have any more questions? I want to talk. What's really interesting too is, and I love the cryptocurrencies, but I also love futures trading, because you get the same kind of volatility and opportunity, and so there's some things happening. I think that's why. I think what's interesting to me, as I was telling Phil this before, I think the cryptocurrencies are now really more of the canary in the coal mine versus gold and silver used to be, because the bankers can't suppress it as easily. But now everything else is catching up. You're starting to see energy starting to move. You're starting to see natural gas starting to move. You're starting to see gold and silver starting to move. And the interesting thing is that gold and silver shouldn't be moving right now, in the sense that the way the dollar is situated, and also the pending rate increases, is starting to ignore it. And energy was supposed to roll over seasonally, and it's not. And the one asset in the energy group that has been incredibly shorted has been natural gas. It's been in a range for quite some time, but now we're rolling into an area where it's been the storage is down, demand is up, and now we're exporting as well. And in the past, they can rely on the domestic market being captive to keep prices kind of locked in a range. But if you go back and you look at 2011, 2013 is actually the best analogy, is natural gas went from $2 to $6 in 90 days because they kept shorting into it, and the winter started to expand out. And that is our analogy for the weather. The meteorologists that I give the most credence to are calling for a 2013 repeat. And what that means is that the winter is going to be a little bit colder and it's going to last a little bit longer in the right places for natural gas bullish pricing, basically the Midwest and the East Coast. And that have a thing called, if you will, it's called the Greenland blockers coming into play, which means that it forces all the cold air down through the eastern part of Canada, basically from the Dakotas, dipping all the way down into the south and coming and then the jet stream coming up on the eastern seaboard, but out in the ocean, and things are going to get really cold. And we already had spot prices for nat gas at $8 in New England last week, and so I think we're going to see a really strong move in natural gas. And Phil, if you want to give me control, I like to show the chart that I've been following, and we've been doing quite well with it. I don't know if anybody, follows me on the ETF side, but yeah. It's been incredible. What's that?
Go ahead and share your screen.
Okay, hold on, let me.
And Bob's mini me once again.
Yeah, I'm sure. I forget, where do I go? Do I go to view? Let's see here. Or tools? No. It's always a weird place.
To share your screen?
Yeah. Let's see here.
You're going to go into call and then share screens.
Yeah, it's not coming up as an option.
Well,
that's so weird.
You got conversation, call, view tools across the top.
Yep. Oh, you know what? I'm not you. It's hard to see the. I apologize, Phil. I was in a different. I have a couple Skypes up.
Well, while Bob's getting his stuff ready, you can see that natural gas on a weekly view is in a big inverted head and shoulders, so really bullish.
Yeah.
And typically, what you're going to see is this range. Typically, what happens is you get a measured move out of this, so you're going to see that from the bottom here to this neckline, which is going to be this trend line here, and then we'll switch back over to Bob. But just want to show you guys. Once that breaks, then you're looking at the same size move from here to here. So that's like a $2.40 move that you'd be looking at from the 394 level. So you could be getting back up into these prior highs that we saw back in 2014. So anyway, let me switch you over to Bob. There you go. Thanks.
Let me see if it shows up here. Yeah, and that's exactly what I'm talking about, Phil. And I mean, if you can't trade futures, buy a little bit of you guys and just ignore the wiggles, because this will make your year. You own some Bitcoin, you own some natural gas, and then we'll be doing this webinar in Tahiti, on a 500-foot yacht. Okay. So, did my thing come up yet?
Yeah, you're good.
Oh, you see me?
You're good. Talk away.
Oh, it says stop sharing, so I don't know what's.
No, you're good. Go ahead.
When you say I'm good, can you see? I see me. I see you, not me.
That's right. But your screen is up, so go ahead and discuss it.
Okay. So right now I have I get a 1 hour up here, and this is what I like to look at first is this is the day trading money machine. We have the crypto money machine, and so I always look at these arrows as giving me insight as to whether I should be buying dips or selling rips when I day trade. And as you can see, we had a reversal on this on Friday, even though it was a small range, is that we've started buying right in this area here, and it finished up around 313. So it broke above this because of volatility mid-channel line. Now it brings back into play this area right here, 320 for next week. Just to give you perspective, one contract from 313 to 320 is $700 move. And so that's pretty sweet, and it's also be a nice move for UGAS. It'll take UGAS back up over over 11 to 1150. But if you go out, as Phil was saying, I'm looking at the daily here.
I'll be right back, Bob.
Okay. If you look at the daily here, forget the arrows here because my signal doesn't work on the daily like that, is that we broke this channel here and we came back into this channel, and now we held support at the 32% retrace here. We're back above the point of control. Now we're going to hit here, and then my view is we're going to come here. We're going to come this low value node here. We're going to hit this trend line, and then this one here. So I'm thinking before Christmas we're going to be up over 350, 360 for natural gas. And then getting a better perspective is go out and look on the weekly. Okay, this is the channel. This black channel line breaks right here. Then it's Katie bar the door, and then we're going to 390, and then once 390 is solved, we're going up here at the 610, 620 area. Okay, and these moves can happen fast because they simply are not storing enough natural gas, and because all these idiots listen to the global warming crowd, and they're not putting as much into storage, and they're going to find themselves caught. And I'll give you an example. Last week, when price was struggling to move higher, the National Weather Service kept releasing warm reports for next week for the Midwest and East Coast, and the people I follow were saying this is a bunch of bullcrap. It's going to be cold. And of course, as soon as the weekend came, the real reports came out, and it's definitely showing a huge dip in the jet stream. So for the Midwest and the East Coast, warm in the West, and that's exactly the La Nina channel of the 2013 variety. There's a couple varieties of La Nina, and that's the one that's the most bullish for natural gas. So that's why I've just been jumping up and down, and I decided on my side of the service, just like Phil focused on a few coins, I'm like, look, I'm not going to spread my bets in 100 different places. I'm going for the kill, and so we've been accumulating FCG, accumulating UGAS. We're in XOG, and I'm trading the futures, and I'm convinced this move is going to be at least a 3-4 month secular move. And then once that happens, guys and ladies, is that we'll have the short of the century upon us going into the summer. The thing will drop from $6 to $2, and then we'll make just as much money shorting this thing as we would going long. So it's going to be a really fun 6 months trading natural gas, and we think we have it. We think we have it right now. So that's kind of what I want to talk about, filling that gas. No, UGA is gasoline. UGAZ, UGAZ, it's the ETF. It's a triple. UNG is a single. FCG is a conglomeration of natural gas stocks, of companies that drill it, and also natural gas, and then the futures. And then you can go like with Southwest Energy, or you can go with Noble, or you can go with XOG, and those are more pure plays. And those are, I think, all pretty solid. They've all been really beat up. And the other thing too is the short interest on natural gas is obscene, like what they do to gold and silver. But the difference between gold and silver is that you can move stuff around inside those vaults because people don't take them anywhere. Well, people are going to take the natural gas, and so these people are going to have to cover their short positions and roll long. And if they're producers, they're definitely going to cover their positions and go long so they can make money on what they're putting out of the ground. So anyway, Phil, that's what I wanted to talk about on nat gas.
Okay, and that's awesome because I think that's exactly what's going to happen. And I'm a nat gas bull too at this point. I think there's just a lot of not only fundamental but technical setup is really, 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 really bullish. So.
Just like we were pounding the table on Bitcoin 6 months ago. Not to take anything away from Bitcoin because I don't think it's stopping. So just put that aside. This is the pound the table move for the next 6 months in the ETF world, and so you don't get opportunities like this very often, and we're being given one right here.
Okay, now what I want to do is we didn't get to everybody's request on charting for, there was requests for charting earlier when we started. So let me go back in the chat and get that back up here.
Are you taking back control, Phil?
Yeah, I got it. So you can go back. Okay, so somebody said OMG. All right, so let's look at OMG. Okay, so OMG, fundamentally I like OMG. The reason is because they're a company that's actually doing something. They're a payment network out of Asia. They got a lot of Asia exposure. OMG stands for Omisigo. They actually have do payments in McDonald's in parts of Asia. They were actually a company before they were an ICO, so it's not ICO came along and they took advantage of it. But I think that when we start looking at payment channels, right, this is a payment channel play, and then they got a huge market that they're facing. So fundamentally, I really like it. That being said, essentially where we are here, this is an hourly chart. So it's actually pretty bullish because if you take, okay, let's get rid of this fib zone because this actually doesn't matter anymore. So what we're looking at now is this large bearish fib zone, okay, from these previous highs. So this back here in October, kind of that start, I mean, actually it started before that, but we got this very bearish trend with Omisigo after it topped out at like back in September, August, September, it was up to 0.032 or 0032, I should say. And then it just went full bear mode, okay? So now we're putting in a big bottom here, okay? And you can kind of see sort of a kind of head and shouldery pattern here, right? That we talk about, this inverted head and shoulders. So there's a couple things we look at. One is breaking this trend line here. So once this breaks, that's gonna probably be the rocket fuel, and we're right up to it, right? So you see how sellers came in, kind of rejected that level, but once we break that, I see this getting taken out. And then once we start getting back above this 0.0014, you see all this volume accumulation here, right? This is a past month or so. So there's a lot of volume being accumulated here. So now once we break above that, I think you're going to start seeing price run right back up to this larger fib bear zone here in this 20.0022 area, let's call it. And this is in Bitcoin terms. And I think that's where we're going. I think the bottom's in. I think all the fork stuff, as with the theme here with all of alts is that we're going to start seeing rotations in. So now we start looking at technical levels, and again, Omisigo has a lot of potential because of its utility. So there's every reason to believe it's going to retrace and get back up to those levels. But first battle would be breaking this trend line, and then breaking through this bearish fib zone. If we zoom back into like more immediate action here, what are we looking at for where this thing's going immediately. So now, since we've got this, we've come up to this trend line and we've been rejected, and that's perfectly normal. That's very technical. That's not very bearish to me. We want to see this fib area hold here, and it may not even get down here. We're getting a screaming setup on the Stokes here for on the hourly for a buy, like we did in this area here. And then what happened was it made a lower low, but it was a bullish divergence because the indicators didn't make a new low, right? And so that bottomed out there and went up. So when we see these areas here of oversold, they tend to produce a pretty decent bounce. Now that we're back into a rotation of money inflows coming back into the alt market, I think we're going to see this hold and this trend line eventually break. So if you're long OMC go here, or if you got long up here, I would say, just hang on a little bit. I expect that to bounce. If this breaks down though, then it may see lower lows. It's possible. I don't see that in this setup currently though. So that's OMG. That's the way I see it. Looking back here in the chat, I'm going from oldest to newest. If you guys have anything else, just type it in chat if you want me to look at something. Any crypto?
Yeah, well, he's doing that. I know somebody was talking about blockchain companies. I haven't really looked into it other than, just some of the big boys. I think, I think IBM and Microsoft get it and understand it. But I don't know of anybody else that might be potentially public that are blockchain companies that, but I will say, and
well, there are plays though, Bob, and somebody asked about that. We covered that in the room, and I thought it was a really good topic. Maybe we can do it next week. We'll kind of go into what are your stock plays for blockchain related companies or crypto related companies. And so I don't know about you, but I think it's a pretty good topic probably to jump on. But one thing I'll say about that, if you look at Square and what they did by making it really easy to buy Bitcoin on their Square Pay app. 3 million people use the Square Pay app. And the interface, which I showed in the video a couple days ago, is extremely easy to use. And so my take on Bitcoin or blockchain related plays would be that you want to find companies that are going to lower the barrier of entry to getting into crypto. Because probably the number one, I would say, technical issue we have for people that that join us in the room and stuff like that is navigating the exchanges. Now, Coinbase was kind of designed for the retail market, and so you have them. They have Bitcoin, Litecoin, and Ethereum that you can purchase with money, with USD. But there's several steps involved with that. If you look at the Square Pay app, I mean, the interface and just, it's like if you've got your Square Pay loaded with money, I mean, you literally just go to the Bitcoin page and you just say, I want to buy. And you just put in how much you want, as long as you've got the money to buy it. And so, I mean, it's just astonishingly easy. And I think that's key. If you start looking at companies that are doing things like that, it kind of goes back, it harkens back to what Apple did with technology. Apple made it very user-friendly to do things, right? Very user-friendly to do digital music, very user-friendly to do all sorts of things. And so you saw this explosion in apps. You needed an iPad for this, you needed an iPad for that. So they made the utility of that very easy. If you do that with crypto, if you find the companies that are lowering the barrier of entry for cryptos, those are the ones that are going to have explosive growth going into next year. So that's kind of like the approach I would take on it, but definitely we could look at some companies, and if you want to, for your traditional 401ks, that I think would probably benefit from what's going to happen here as we start seeing the institutional inflows into this entire space.
Yeah, that's a good idea, and I have my thoughts on NVIDIA too, but we'll save that for next week, and also
and you know what, that's a great point. That's an entirely different part of crypto too, right? Is the mining. And that's one aspect that's not going away, right? So yeah, NVIDIA, AMD, if they start deciding to get into more of the specialized, the ASIC chip stuff, you know, they could really have the sales could really take off. And so that I think that's just a continuously open-ended thing where very bullish setup for those hardware companies.
Yeah, there's a lot of different. Yeah, and then also too is we can also talk about there's a few new players out there offering Bitcoin IRAs, and and I personally work with one of the guys that runs one of these IRA administration companies, and he just let me know that they just got all their approvals, and so that's going to really open things up for people too. So I'll talk about that a little bit more too. Really low cost way you could split your IRA, and it's not just, I call it a Bitcoin IRA, but it's really a crypto IRA. As long as you stay within the exchange, just like a stock market, and you don't violate any of the taxation rules, you can trade your coins tax free. So a lot of things are happening, a lot of exciting things too.
Yeah, and I think too, like, what I wanted to get to was Alfred said he didn't see any value in Litecoin too much because nobody takes it. So a lot of people don't take a lot of crypto at the moment, but there's actually in Asia, I think in Japan, and you can look this up yourself, but there are payment networks accepting Litecoin. So it's growing. And the other thing you have to think about, and I talked about this in my Litecoin video, is you're going to see a complementary effect with Litecoin as far as this whole Lightning Network goes, because what'll happen, and this isn't really understood widely, but when you start doing cross-chain atomic swaps, which in layman terms just means you can cross-talk between different blockchains, so Litecoin can talk to Bitcoin blockchains and vice versa. Now you can do smart routing of transactions. Litecoin's network was designed, or blockchain was designed, to do cheaper, faster transactions. So the transactional cost of moving currency around could be atomic swapped through the Litecoin blockchain cheaper at sometimes, depending on it really depends what's going on with the market and transaction and volume and stuff like that. Stuff like that. But there could be you could envision a setup where if you're in, like, say your wallet, say you have a Trezor wallet and you say I want to send X amount to the exchange, it might automatically figure out that, well, if I send it through the Litecoin network, it's going to be faster. So there is utility case for Litecoin. So I wouldn't say nobody takes it and I don't see I do see value for it, but we're in the early adoption stage, guys, and so it may not be blatantly obvious right now, but I would not discount Litecoin. The other thing too is, I go back to barrier of entry. It's one of the three that Coinbase provides. So I guarantee you, retail investor is going to look and say, man, I can buy 0.1 Bitcoin because it's $7,000-8,000, or I could buy 10 Litecoin, and that has room to grow. And so there's also that aspect of the market too. So I think there's no reason to think, because of just the way that the crypto economy is, that we don't see Litecoin going into triple digits going into next year. And you could very well see that in an Ethereum type run, where you saw Ethereum back in April go from double digits to triple digits, and huge percentage gains. So I don't discount it. I think that there's definitely a use case for it, and I definitely think that there's a lot of upside coming.
Yeah, I agree. And Phil, we're running over time here, so let's talk about the crypto ETF for stocks for next week, and then yeah, it's Thanksgiving. We'll be good though. I'm around, Phil, next Saturday. Are you?
Yeah.
Yeah, so we're good to go. So we'll be on next Saturday again, and we'll keep pounding away at this. I mean, this is important stuff. I think people can make a lot of money. And if you guys are subscribers and you want to extend or add to the services, check out the Black Friday specials. They're our other partner, Sean. I think he's trying to put us out of business with some really good deals for you guys. And also we added one today. If you just wanted to join the rooms, you can for $300 a year. You don't get any of the software. You don't get any of the the courses, but you could just join a room for a year for $300. I think that's out there again as well. And so if you have a membership and you want to extend it, you can. If you don't have one, you can buy one. And yeah, we think we're adding good value here. So we appreciate your support if you're a client, and if you're not, we'd love to have you join us and make some money with us. But I appreciate your time. And Phil, thank you once again for some really good insight.
Bob, if you got to run, I'll run through the last couple of these requests for just some charts. If you got to run.
No, I don't have to run. I just wanted to be mindful of time.
All right. So somebody asked about 10x. I'm just going to run through real quick, guys, and then we'll wrap up. Ran up to its bear fib zone, and now it's pulled back. This is definitely a bounce zone here. So 10x to me technically is a buy here, but it has to really push through this level here. And if it does, it's going to get more resistance up in this 0.00024 level, where we had a lot of volume accumulation, and that was prior support, and then it broke through it. Okay, so that's 10x pay. Neo I like. Neo is taking off. Neo is the Chinese Ethereum, and I think basically huge technical move here, broke through this bear fib zones, is pressing up against this one here. This is key. Breaks through that, it's going to retest this trend line from the bottom. So if you're a Neo and you're bullish, you are looking pretty solid there. Let's see. I think that was. It looks like it's it. That was it for requests.
Yeah, and Neo is the one that we caught a week ago, and I called Phil and said, hey, if we're going to go these altcoins, what do you think of Neo? And that's one you got to put in your in your drawer here. And if they really start working pretty strongly with the Chinese government, they accept their protocols for their blockchain. Neo can go through the roof, and we got a buy signal on it, and then lo and behold, 7 days later, it's up 40%.
Yeah,
so,
yeah. Look at, just one thing good about the indicator is that it will signal a buildup of pressure, and so here's this beautiful long signal. And what I say, if you're long, as long as it holds the, sometimes you'll get a long signal, you get a little bit of a pullback. That's not abnormal, but you want to make sure that you're not making new lows. And so then you get the breakout, and now we got an exit signal here, which makes sense. We're getting into some bear territory, but what a huge move that caught. So this is our crypto money machine indicator, and it works on hourly, it works on daily. If you don't have a lot of volume in a particular crypto, then I recommend looking at it on a daily chart for entries. But I think it's a long only indicator, so now we're going to start segueing back into bullish territory for a lot of these alts. So this indicator is going to light up a lot of swing plays if you want to get in and out of alts. One thing alts have taught us is that getting in and out of them is pretty profitable versus long-term holding, because you really have to make sure that you're in something that's going to be around a long time, right? So if you guys want to get that indicator, go to the TradeGeniusAcademy.com website, and it's part of those November specials, Black Friday specials. And they're going to be the best deal of the year, because you're going to get the indicator, which normally standalone is it's a leased indicator, so you're paying annually for it. But you're going to get that in the room way less right now, probably as cheap as we'll ever have it. So, but it's a really good swing trading tool.
Yeah, we love it. This is basically, the indicators are basically the protocols that Phil and I use to trade, and we actually collaborated on this, coming from two different directions. And we were kind of shocked how close we look at the world, and we just had to adjust the crypto machine for continuous trading, and we're really pleased with it. So we use it ourselves. I sit there every day. As soon as I get a long signal, I allocate some money to the trade, and I ride it. So I'm more of a trader than a stacker kind of guy, so I don't mind flipping coin to coin to coin to coin to try to build my stack. So I encourage you to take a look at it. We really like it. And then we can't cover everything, so if we're not following something, you can go out on your own and trade this and do quite well for yourself.
Okay, well, I think we got caught up on requests for crypto charts, so I think we're good.
All right, good. Well, hey, well, thank you, everybody, and let us know in the comment section if you think we added value, if there's some things you want us to do differently, or change, or topics for the future. We we do this for you as well as for ourselves, and we enjoy it, and we want you to get the most out of it too. So thank you very much.
All right, guys, have a great weekend. Take care.
Yeah. John Beer, I'll mention it next week. He's not ready to launch yet.
XMR.
All right, Phil.
I think we covered Monero, but
yeah, hey Brian, just go back in. You'll have to kind of cycle through where we were with that. We kind of roll off here now.
Monero, look, like I was saying, Monero is up against its utility case against now Bitcoin and Litecoin looking at confidential transaction technology. That's Monero's use case. So now you're gonna have to go up against the big boys that are doing the same thing that Monero's trying to do. That's what we're trying to point out from a technical aspect on the daily. You have to get through this fib zone here, and actually this is a bearish fib zone, so we'll make it red. But then you also have a bullish fib zone. That's there. So technically speaking, you're at a spot where you bounce, but again, I'm a little bit leery of it as a long-term play now because of the ability of these other coins to do its single use is to be confidential and stealthy on the transactions you can. And if they're going to incorporate that into Litecoin and Bitcoin, that's a problem for long-term bulls. Not to say you can't trade it, and not to say it can't move up, but it may go sideways, or it may start to trickle down because people aren't seeing the utility anymore. So just keep that in mind. But right now it's a bounce. It's a bull. I would be a buy in this area with your stop here below this low.
Super.
All right. Well, thanks, Phil, who may relay it to us in the crypto room. What is he talking? What is John talking about? Oh, the IRA. I'll let Bob handle that.
Yeah, we'll talk next week. He's not quite ready. He's launched already, but it's a soft launch. So he told me to give him a couple weeks so they can get ready for the onslaught of customers.
I didn't realize I didn't have the screen transitioned over to the Monero chart when I was talking about it, but this is what I was talking about. We're going up to this bearish fib zone. It's getting rejected, and we're now in this bull fib zone, so it's a buy here. That's what I was talking about. Sorry, I didn't have the chart up, but anyway.
Well, cool. All right, guys. All right, Phil, let's shut it down. Thanks, guys.
Thanks, guys. Thanks for watching. See you next week.